Tariffs. Where does India go now? The latest round of tariff deals, this time between the United States and China, the two trading giants, can upset some of the calculations of businesses in other countries who are hoping to elbow into the US market, India being one of them. As per the April 2nd announcement, subsequently paused, Vietnam, for example, was better off than China with a 46% rate, while Thailand was at 36%, Malaysia at 24%, and India was at 26%, and thus better off than everyone else. And at this point, everyone is at 10%, and China, of course, is at 30% as per the latest figures. So where does this leave India at this point, and how should businesses be looking at the months ahead, given things as they are, knowing, of course, things could change again? I reached out to Ajay Srivastava, founder of the Global Trade Research Initiative, a think tank in Delhi that looks at trade, and I began by asking him how he was seeing the US-China trade deal and its likely impact on India.
So the broad takeaway that first comes to the mind is what will happen to the China plus strategy so meticulously promoted by the US and many other countries. So the strategy took a lot of boost after Trump announced higher tariffs on China. For example, the highest was 245% on syringes, then average 170% on garments, 145% on most engineering and other goods. And on the other countries, he has postponed these country-specific tariffs. So that means 11, 12, 13% tariffs on other countries and 145+% tariffs on China. This was a big tariff gap. So if you look at, say, India, we are out. Our cost of production is more than China by about 20 to 25% in many goods. So we can safely make those goods even if we are expensive compared to China and export to US and rest of the world. So because of this tariff arbitrage, big movements were taking place everywhere in the world of trade. So US investors, Chinese investors, they were roaming around in countries like India, Vietnam, Thailand, Cambodia, many countries. And they were trying to talk with the existing businessmen running units for expanding those units. Nobody wants to invest high billions of dollars because no one knows when the Trump is going to change his strategy. So those things were happening. But suddenly now with the US imposing 30% on China and 10, 12% on the other countries, that arbitrage has come down substantially. So I think these activities also will come down substantially. They will remain limited to a very superficial number of sectors.
This, of course, is a 90-day scheme, and we don't know what will happen at the end of 90 days. I mean, what's your sense? I mean, could it go lower? Could it go higher? I mean, as a guess.
My understanding that 10% is here to stay as the baseline US tariffs. For certain products like steel, aluminum, automobiles is 25% the baseline. So this 10% will not go down. That's what the current indication is. This will be staying. And 90-day period that expires on 8 July, it's like a gun and a temptation to the countries. You come with deals, offer. If I'm happy with the offers, I'll continue with this 10%. Else, I'll revive your country-specific tariffs, which for India's case was 26%. So India has a choice. If it can please US, it will continue with 10% tariffs. If US is not happy with what India offers, then it will be 26% tariffs on Indian goods. But the point which is to be noticed is that even if India offers zero tariffs on many of its products, US is not going to lower its tariff from 0% on most. So that's the new normal in the world trade.
But even I was reading an edit article or a edit page article in the Wall Street Journal, which is usually quite friendly to the Trump administration, but has been opposing him on trade and the fact that he has been increasing tariffs. And their point was that I think even 10% is 4 times what the current tariff is or was. And I was wondering whether that itself is challenging for exporting countries to manage.
75% of the world trade flows at zero MFN tariffs, zero tariffs. And the average global tariff is 2.6%. You know, these developed countries used to have lower tariffs and developing countries like India used to have higher tariffs. Now, US will be in the highest tariff category now.
Interesting. So, which brings us to India, and the negotiations are on. A deal was supposed to be announced even last week, but it didn't happen. And what we did hear from US Commerce Secretary Howard Lutnick just day before yesterday was that this is going to take time. And he said there are 7,000 items which have to be worked through, which of course I'm assuming were always there, but it's not going to be an easy one. What's your sense on how things are likely moving in the India US context?
What Letnik says, he's an insider. It doesn't make any sense to me with what the US did with UK or with China. They did not talk about tariff lines. They focused on few items, 20, 30 items from the US side, and could get as many as possible, 3,000, 4,000 from the UK side. In the China also, they didn't talk about the item, they talk about most products. So it's not tariff line level nuanced discussions that's taking place. That takes place, that takes time. But what the US has done with the UK is that it will do some headline management by focusing on top line concessions by the UK and then say that as a deal. And the rest of the negotiation will linger on. So what Letnik says is focusing on the entire negotiation. That takes time. It's not complete between US and UK also, but a still deal has been announced. I think the similar strategy may be followed with India, and we may expect some sort of deal with India also soon.
And even if a headline deal is announced, how long does it usually take for, let's say, all the specific paperwork to get done for, let's say, large trading partners like India, US, or US, China?
If the deal with common understanding on the low hanging fruits may cover up to 90% of the bilateral trade in goods and services. And for UAE, the Ministry of Commerce completed the deal start to finish in 3 months' time, less than 3 months' time. With Australia, I think less than 4 months' time. But both the sides, they don't agree on the common understanding. It may take years. For example, with EU, we are negotiating since 2007. It is nowhere near conclusion.
But with UK, we've finally come to a deal after many years of negotiation as well.
UK negotiation started in 2022 only. It's not old.
Okay, so let me come to non-tariff barriers, which has been brought up in the context of China, but is also relevant in the context of India. What's your sense? You think, countries like India will give in on non-tariff barriers, or some of them at least? I know some are red lines, but how do you see that aspect?
So non-tariff barrier is a term which is a non-standard term. The standard term is, see, if I make some policy, I call it non-tariff measure. Measure which is not the tariff measure, but other than tariff measure. For example, I put some import restriction on some product. I call it measure because I think it's important to ensure health or some environmental standards. I have to maintain those things. If other countries find it unreasonable, it calls it non-tariff barrier. So there is always this tussle when a measure becomes a barrier. No country agrees that it imposes any single non-tariff barrier. Same is the condition with India. India imposes many legitimate policy restrictions, which the US may call non-tariff barriers.
So would this be in areas like agriculture and dairy mostly?
Of course, for example, they say that our MSP is a barrier. It's of course non-tariff barrier. Our public stock holding should be diluted. It's not needed. Then our subsidies on rice is very heavy. It's a non-tariff barrier. Then they say, for example, I'll give you one very interesting example. India restricts import of dairy product, for example, butter, made of a cow which has been fed the meat of another cow. We feel it's in our right to say so. US feels it's a big non-tariff barrier. It's totally unreasonable. India should do away with that. So that's how I say it's absolute must non-tariff measures for us, cultural sensitivity and other things. And US finds its non-tariff barrier. They openly talk about this.
Seeing, for example, in the case of the US-UK deal, the UK has allowed imports of beef, but it does not allow hormone-treated beef, which apparently disqualifies almost 80% of US beef. So it's not just India, even other countries have.
Because I think UK also feeds its cows this meat of another cow. Remember, about 20 years back, there was a mad cow disease in Europe. They had to slaughter millions of cows because they were fed the meat of another cow. So this practice still goes on.
Right. Last question. So, in terms of where we are today, and given that the tariff lines have again changed and so on, what do you feel companies or businesses should be doing? Should they be waiting to see where things go? Should they be striking deals?
All I say, companies should focus on cutting their costs of production, focus on branding, focus on delivery. Trade is a peripheral thing. If your product is good, it will sell. So whatever best policy is available internationally, they can use that. They should use this time for making their product better and cheaper.
Mr. Srivastava, thank you so much for joining me.
Thank you. Thank you.